Very good morning to you and welcome to another CEO interview on Core Finance. Today I'm delighted to be joined by Edward Bowen, who is the CEO of EPI Group, which is a first for our CEO interviews because EPI Group is unquoted at present, but I'm sure Ed is going to tell us a bit more about that. EPI Group is a very big wheel in the oilfield services business and deals with a huge number of companies that you would have heard of, and I'm looking forward to talking to Ed about those. So, welcome. Good morning,
Malcolm.
Ed.
Thank you very much.
Nice to see you.
Privileged to be sat in a chair that's usually reserved for operators. So thank you very much.
What I'd like to do to begin with, as I always do, is to ask a CEO to give us a top-down view of the company. So, given, particularly in this case, that a lot of people won't know that much about outside of the industry, much about EPI Group, perhaps you could tell us a bit about what it looks like.
Certainly. So the EPI Group is an oil and gas consultancy. We've been established for just over 30 years. We've worked in just about every geological and geographic setting. And ultimately, we help operators de-risk their exploration and production work programs. We've done about 2,500 projects to date, and today we're in just over 24 countries on 50 projects, helping in a wide variety of ways in a pretty innovative outsourced way. Good.
I'll come back to a few of those in a minute. We'll talk about geographies and teams and everything else. First of all, how's the oil price shenanigans over the last 2 or 3 years? Having had the 115, 27, now 70, how's that affected the oilfield services business and EPI?
So we've had a pretty tough time over the last 3 or so years. Operators have decimated their workforce. We've seen some sort of 440,000 job losses. Exploration budgets have dried up. Work programs have been put on the back shelf. So it's been a very, very difficult environment. And we're starting to see that recover now with a much more stable oil price. And as we see that stability come back to the market, the operators have very little expertise in-house to actually then undertake those work programs. And certainly, I'll just go on to say, certainly some of the cash-rich companies are now really getting back into the market. There's a sort of dynamic shift between exploitation and exploration. It's now no longer less expensive to pick up assets by distressed companies. Actually, we're now seeing a move to replenish those reserves through actual work program development.
Good. So let's drill down a bit deeper into how EPI actually services its client. How do you break down the business?
So we have 3 core divisions. The first is our operations division, which really deals with geophysical support, principally on land, marine, transition zone, seismic survey activity. And that's the real sort of bread and butter of EPI. We've been doing that for about 30 years. We then have a slightly smaller division called Applied Geophysical Solutions, and that really deals with our geophysics. We look at modelling, survey optimisation, bespoke processing. It's the really high-value, high-end part of that piece of the business. And then we have a geoscience division, and that we bought through acquisition in 2016. So we bought a business called PDF Limited, based here in the UK. And they have 2 parts to that division as it is now. Mm-hmm. The first is sort of traditional consultancy, so undertaking interpretation projects, farm-ins, farm-outs, enhanced oilfield recovery type of work. And then they have something that's pretty unique in this industry, which is called the Outsourced Exploration Department, or OEXD. Mm-hmm. And that's where we change the dynamic slightly from being a client and supplier relationship to one of a long-term strategic partnership. And we do that through risk share. And thus far, we've had about a 92% success rate on our farm-out process. We've operated 26 blocks for clients. And we do that very much with the operator card there, so you don't actually know that it's EPI sat there in the background. Doing the work.
Good. Now, I'm particularly interested in the outsourced exploration department situation because I can imagine that that would have been something which would have been pretty popular when the oil price was coming down. Oil companies were looking to cut costs, but still wanted to do a certain amount of exploration. So, first of all, did you see a pickup in that business when you were going to oil companies and saying, you're getting rid of quite a lot of your exploration department, we can help? And I suppose secondly is that now that the oil price has got up to $70 again, are they saying, we're filling up the exploration department in-house again?
So it's quite interesting. If you look at traditional consultancy, you go out, you offer advice to operators, and that's usually caveated with waivers and riders and disclaimers. Where OEXD comes in, it actually is we take part of that risk on. So we're actually putting our money where our mouth is. And if you think sort of post-2014, where the rule book in the supplier relationship has almost been torn up and rewritten, this form of risk share actually is gaining a lot of traction. It's something we've done for some time. But why shouldn't we be rewarded if we're successful at doing some appraisal drilling or farming in, or indeed helping with a successful well? And if we're not successful in those work programs, we shouldn't really benefit from a big bill at the end of the day. So it's much more of an alignment with the operator.
So, I think that I'm very interested in this risk sharing because it's something fairly unique to EPI, as I gather. So, as you said, so you actually, if you're hired by a company, you take on projects with them, and it's basically it's in your interest for you to get the cost down, which you pass on to the company, and then take a cutback from whatever you've saved for them.
That's right. So the objectives are completely aligned. We're remunerated as an executive board, or that business is remunerated, and that comes in achieving key milestones, and perhaps it's taking shares in the operator. But we're ultimately rewarded on success, and if we don't succeed, we're not remunerated. And I think that's the right way to operate.
So what sort of commodity risk do you think EPI has? You must sit down or have sleepless nights occasionally about what's been going on, but how do you approach the commodity risk within your business?
So we are clearly at risk of the oil price. There's nothing we can do about that. But what we have done is taken steps to sort of de-risk our business, and we've done that in sort of four quite distinct ways. The first is how we engage with our people, and that's on a partly employee utilisation and then an associate model, and we can flex those resources depending on the types of work, where it is, and how busy we are. We spent a lot of time ensuring that we actually are a full E&P consultancy, so that when one particular division is quieter, another one will pick up that slack. We spent a long time over the last 4 years expanding geographically. So if I go back sort of pre-2014, we had one company in the business. The group's now made up of about 13 companies, with registrations and offices in America, down in Australia. We've got 6 agents in Indonesia and Malaysia. We've got a corporate registration in Azerbaijan, in Colombia, in Canada. So we've got a much better sort of global footprint to react to where the work is. And I think the last one is really about compliance and about having the ability to mobilise people compliantly very quickly. And we've seen a big shift in our operator clients sort of pushing down the risk of compliance onto us. So we actually need to operate in all of those countries compliantly. And, we're putting people in Sarawak or Côte d'Ivoire or Ukraine. We're potentially creating permanent establishments. We need to make sure we're compliant, we're paying tax locally and so on. So actually having that resource in-house has been a big differentiator, and what it does is it puts us ahead of our competitors.
Interesting, because I had a sort of separate question about geographies, which is interesting because you've answered quite a lot of it already. But in terms of geographies, are there any areas where you you're considered to be specialist? Are there any areas where you tend to go quite a lot? Are you North Sea, or are you finding that, I know you've done a lot of work in Africa and so on. Maybe you can give us a bit more sort of idea of the geographies that EPI works in.
Certainly. So the North Sea is undoubtedly our bread and butter. We've been there for 30 years. We've worked pretty much every year for Statoil without exception, looking at their 4D OBC type programs. We've got a strong expertise in the fold and thrust belt, so we've a lot of expertise in the Zagros Mountains, in the Andes, and also in the Carpathians.
Yeah.
And then, more recently in Asia, where we've got some quite large programs for likes of Ophir, Repsol, etc. So we're pretty broadly geographically spread, and ultimately we have to go where the operators go. So we're slightly tied in where where's the flavour of the month for them. We'll sort of carry it in with them.
Yeah. Now you mentioned one or two sort of household names there, but going onto your website, you've got a pretty blue chip list of clients, past and present, haven't you? So why don't you run through? I know that you can't tell us most of the things about your clients, but tell us, because you're not just acting for a small independent who's outsourcing its exploration department.
Correct.
You mentioned Statoil and majors as well.
Yes, so we're very privileged to have a large number of master service agreements with the big operators. So the IOCs, we're working for the likes of Shell, BP, Total, ExxonMobil, Chevron. The majors, the Anadarkos, the Repsols, the BHPs. We do quite a bit of work with the NOCs, so the Statsolis, the ADNOCs, the PTTEPs in Thailand, and then also a broad range of the AIM listed businesses, the Echoes, the Globals, etc. So it's a pretty broad spread.
Yeah.
And what's actually very interesting in this market is the work we're undertaking at the moment is right across from the super majors all the way down to the really sort of one-man band type operators.
Yeah. So this brings me to your team. I mean, what you've explained already in the technical terms, some of these guys are hugely techie and extremely competent in their specific defined technical processes, and yet you've also got a sales team who presumably goes out and speak to equally. How do you all do it? Tell us about your team and who you've got.
So we've got four sort of principals. Dr. Mark Enfield, structural geologist by background, PhD from Imperial College. He has a 65% exploration success rate. He heads up the geoscience division. Dr. Matthew Watkinson, PhD in sedimentology, and a huge experience in the unconventional resource plays. We split his time between Plymouth University, where he's a senior lecturer in petroleum engineering, and that gives us a lot of young talent that we can then bring in, once they've graduated. Dr. Richard Goodchild, a processing geophysicist with 20 years of experience in land and marine seismic processing. And then Andy Smart, who is our COO, he has 30 years in the seismic industry, had a long and distinguished career with Western Geco, and was behind their single sensor technology. So we've got some real talent at the top, and then sales team, and that's probably, again, another differentiator. They're all from related industry backgrounds, but actually their role is to go out, build relationships, and then bring in that expertise depending on where an operator is in the cycle. So it's a blend, and I guess my job as the CEO is to surround myself with people who are all more qualified and better than I am, and just sort of glue it all together. Yeah.
So, these people have probably been with you for quite a long time. Is it easy or difficult to find these people and want to work for a consultancy? And how's that changed in the last 2 or 3 years with some people being sort of released by the bigger companies and so on?
So retaining talent is clearly one of the challenges we face. As the market recovers, we need to make sure that they're all correctly incentivised, and talk about that in a second. There's been a lot of talent in the market as the operators have decimated their books. That's enabled us actually to pick people up who traditionally we wouldn't have been able to afford. And in a lot of these projects where we need sort of guru status people, we're able to sprinkle their gold dust on the projects to really make sure that the work is being undertaken correctly.
Yeah, and my next question is to a quoted CEO would be, you know, who are shareholders and how do you fundraise and everything else. Slightly different from you, but you must have shareholders and you must have, I understand you've got private equity backing and that's well. Talk us through that.
So in 2014, we did a management buyout. We brought on a mid-market PE house called Palatine Private Equity. We sit in their second fund, which is about 150 million in size. And they are a generalist investor, and they back management teams with, you know, a good story and some growth potential. When they came on board, we were probably a little bit on the small side for the sort of, you know, check size they were wanting to write, but they wanted to follow us on the, you know, on the M&A journey and to help us bolt in sort of complementary acquisitions to bolster the group. So they've got a majority stake in the business. But the management team has in excess of 30%.
Right.
So they are in control of their own destiny.
Yeah.
They're correctly incentivized, you know, and they will share in the spoils, you know, as we grow the business.
Excellent. And moving on, you mentioned, I know you've made the acquisition of PDF. Have you made any other acquisitions, or are you just keeping your eyes open for? So
we made one in 2011 where we bought a land seismic consultancy. We bought PDF in 2016.
Yeah.
Over the last 2 years, we've tried to buy two complementary businesses. You know, the challenge of buying owner-managed businesses is you've got to get timing, you know, valuation expectations and an exit for them all aligned, and that's been very difficult in this oil price environment. So they've both fallen away at almost at the 11th hour. Nevertheless, not giving up. You know, there are businesses out there, but we need to make sure they're right for the group. And you know, with the support of Equity House, you know, they're there behind us, but we need to make sure that we're doing it responsibly.
So, is it a plan to float the business at some stage? Is that?
It's not an immediate plan.
Yeah.
It's certainly a goal of mine, something I'd like to try and engineer one day. So, watch this space, but probably not in the near term.
Okay. Now you've got a board of a combination of the private equity representatives. To talk us through who runs the business.
So we have 2 seats on the board for the Equity House. We have an executive chairman who sits there, you know, in the middle, and then we've got really the management team. So you know, we've got a COO, FD, seismic operations director, and the director in geoscience. So the management team are very present on the board, and with the help of the Equity House, we're relatively nimble, so we can make quick decisions. You know, we can change our strategy as the market develops and changes. And thus far, it seems to work quite well.
And you mentioned you've got these all these technical people around you and everything else. You started this business pretty much from scratch, without, you know, having had a grounding in the oil and gas business. How's that developed over all these years? You know,
So you know, EPI was a family business. It was started by my parents-in-law back in the mid-80s. I left school at 17, so I have no qualification, probably the most unqualified person in the business. And I've worked my way up through the top in the service industry for the last 20 years. I've been hugely privileged for the last 8 years at EPI. We've seen great change and you know, been able to grow and build a team. And I think we've got a great future ahead of us.
Well, I've met most of them. They're a very, very good bunch of people, and I've been very impressed with them as well. Unfortunately, we're beginning to run out of time, and I always want to keep a little bit of space back for my final question, which is always the same. Is how do you see EPI Group changing, and where would you like to see them in a year or so's time? So
the storm is starting to calm. We've had 3 very turbulent years. We've got operators who've decimated their workforces. They now need to get on and fulfil those work commitments and undertake those work programs. We're on very firm foundations. We've got a supportive Equity House, as I mentioned. So there's a great opportunity for us to take advantage of this recovering market. And we've got a compelling story, credible track record in outsourcing. And I want to make sure that we're there for clients to help them succeed. And that's going to be an immensely exciting journey as the phone keeps ringing.
Good, and if they succeed, you do too.
That's absolutely right.
Thank you very much. Today it's been my pleasure to interview Edward Bowen, who's the CEO of EPI Group. I look forward to seeing you again on Core Finance CEO interviews shortly. Thank you very much for watching.